Okay, great. So once again, welcome everyone to the webinar this morning. And the topic that we are talking about today is 5 steps to consistent Forex profits. So my name is Raman Gill. I'm the founder of this website, tradingwithvenus.com. And in this session today, we will talk about the 5 steps, a 5-step process to consistently make money in Forex trading. And then we'll also take a look at how to accurately predict the market direction for the next day so that we can take trades in the direction of the market. And this, of course, will help us take better trades and make more money. And the third thing we'll look at is the most important step that most traders miss out on. And this is a step that can help us really make profits and actually keep those profits in our pocket. A quick disclaimer, I am not an investment advisor. So if you have if you're looking for specific advice for your own situation, please do go see an investment advisor. Okay, a little bit about myself. Like I said, my name is Raman Gill. I am a Forex trader. I've been trading for the last 7 years. I have, in terms of my background, I have a background in financial industry. I've been, working in the financial industry for quite some time, even aside from the trading. I have 2 master's degree. I've done MBA from Cornell University in the U.S. and Queen's University here in Canada. Before that, I did my bachelor's in computer systems, and I worked in. I ran an IT consulting company for 10 years, which I sold, and then went into the banking industry. In terms of my personal history, I actually I grew up in India. I moved to Canada when I was about 20 years old. And at that time, it was, I didn't actually have a lot of money, just like any new immigrants. My parents I came in with my parents. My parents had some money, but I was reluctant to really ask them for any kind of help with my own. So I remember I used to go looking for jobs, and I used to have maybe like $5 in my pocket, just enough for a bus fare. And I wouldn't even buy myself a can of pop because I was really trying to be, conservative with my money. And if I look back, this was back in '97. So since then, I have to say things have changed a lot. I don't usually ride the bus now. I have a nice car. We have a couple of nice cars, and we have a nice house. We have rental properties, and of course I trade Forex. So I have more control over my finances than I did way back in '97. And a lot of that, I have to say, came from hard work, because I went back to school and did a lot of hustle, essentially. And during the time, so I've done a whole lot of, I've gone through different variations of my working, in my working history. I've been an employee. I have ran my own business, and then I've been a trader as well. And now I'm back trading again. I did, in terms of working, being an employee, I think it's a good thing. It's you get a certain amount of income coming in every month. You can work a 9-to-5 job, and you don't have to really worry outside of the 9-to-5. You don't have to worry about too much. But what I found was the higher my income grew, especially after I hit the 6 figures, the higher my income grew, the higher my taxes, and the more amount everybody else kind of got out of it. Okay, sorry, just 1 sec. Let me just mute everyone here. Give me 1 second. Sorry, 1 second, folks. Okay, so I'm just going to mute everyone. If anyone has any, if anyone has a question, please throw it in the chat. How's the sound now? Is it better? Is there any more background noise? Okay, perfect. Thanks, Justin. Okay, great. So just going back to it. So as an employee, I found the bigger my salary got, the more cut everybody else, the government and taxes and everything else wanted out of it. And because of that, like I said, I had the hustle, so I decided to work for myself. I started an IT consulting company, and I started it from scratch, where I didn't know a whole lot of people. I didn't have any clients to begin with, so I just went and knocked on doors and actually got the company to a place where it was successful. I was able to actually make really good, again, 6 figures from it. It was great. However, I found that I was working 24/7. I had a lot of clients, and I had to jump on, especially in the IT field. I had to jump every time there was a problem. I had to jump on problems, take care of these issues. And I actually remember a situation when I used to live in Vancouver at the time. We were in Toronto, my husband and I. My husband's mom, my mother-in-law, had actually just passed away. And I remember I had to I had to take care of problem while I was here in Toronto at my mother-in-law's funeral, because if I didn't take care of it, I would lose the client. Client had a major IT issue in the company, and that had to be, and they were losing, thousands of dollars a minute just because they didn't have their computer systems up. So it was difficult. I did have employees at the time who I had sent in to take care of the problem, but they wanted to talk to me since I was the owner of the business. So I had to essentially take care of the client, make sure the problem was solved, and while, kind of being at the funeral. So it was a very difficult situation. And also I found we were trying to start a family, and because of the stress, it just wasn't working out. So I had a couple of, issues, miscarriages. So we decided to just change our lifestyle. It was way too stressful. The money was great. However, it was way too stressful. So it just wasn't working out. So I ended up selling the company, and we moved here to Toronto in Canada. So that was a bit of the background there. So once I did that, I started trading full time. This was about 5 years ago. And since then, I went back to school, did my got my MBAs. We have 2 beautiful children now, so that all worked out beautifully. However, I did when I started trading full time, I was looking for other successful traders in Forex, because I had been trading for about 3 years at the time. I was profitable, so I decided to do this full time because I really enjoyed it, had passion for it. And some of the benefits was that I didn't have to deal with any clients. It was just the amount of hard work I put into it, I would get the results that were similar. And I had seen profits coming out. And this is when I was super busy and just kind of started. I was trading on the side, and I was still able to see the profits. So I thought, okay, this was a great industry. I could trade any time of the day. I was, I liked it. It wasn't too complicated. It was only one side. Like, for example, in stock market, you have to look at, oh my God, there's so many industries that are listed on the stock exchange, and it's hard to keep track. Even if you pick one industry, let's say pharmaceuticals, it's hard to keep track of all the different all the different companies in that. And if you narrow down the number of companies you're looking at, and even then you had to take a look at a lot of different aspects of it. You have to look at their P&L, you have to look at the company valuations, you have to look at what they're coming out of it, you have to take a look at the market research. So there are a lot of factors that you have to look at. Whereas in Forex, I found, okay, I could just pick a handful of pairs that I wanted to trade, and I could just pick a handful of strategies that I wanted to trade, and I could be profitable doing just that, basically narrowing my focus and just getting really good at a handful of things. So that's what really attracted me to Forex. And actually, since then, I did go back to working as an employee, and I am actually currently working as an employee. I've been trading for the last 5 years. Like, I have been trading myself as well. And now I'm finding I just have a lot more passion for Forex as opposed to working for somebody. I do get a good paycheck. However, I can make more money trading Forex than I can with my paycheck, even though it is really good. I do have a great job. However, that's just not where my heart lies. And I'm finding, like I said, the higher you go, the more harder you have to work for someone else. So now I want to choose to work for myself, and that's why my goal is to just be working by end of this year to kind of close that chapter and go back into Forex trading. However, the last time I wasn't able to find other successful traders, and now I want to help create other successful traders. So if I couldn't find other people who were doing this the way I wanted to do it and do it properly, like running it like a business, because I wasn't able to find that, my purpose now is to help create those people, find some really people who are hardworking, who are willing to learn, and who would put in the effort to actually get to that elite level. So that's what I'm looking to create, and this is that's why I'm running these webinars and helping other traders or helping other people who want to learn trading, help them with that. So this is where I am, and this is why I'm doing what I'm doing. And of course, my end result that I want is, like, in the end, I would like to start an investment company. So that's what I'm transitioning out to. I'm looking into that, setting up an investment company so I can trade for other people, or I can invest on behalf of other people, which is the next year, which is the next chapter that I'm going to be going to. So that's why, however, you can't trade in a vacuum. I found that you need support. You need people around you who are doing similar stuff, so you can bounce ideas off of them, so you can learn from each other and keep each other motivated. This can be a very isolating job if you're just trading on your own. You need to find a group of people who are doing similar stuff, who are successful. Because if you look, the saying that says, if you want to see where you are in life, look at the 5 closest people that you surround yourself with. So I'm looking to surround myself with winners, and that's why here we are today going through this. So today I will share with you the process that I follow to create profits in this industry. Again, like I'm giving all of this is for free. You can just take this process and replicate it for yourself. So let's take a look at that process now that you understand where I'm coming from. Okay, the step 1 of the process that I follow is fundamental analysis. So the first thing actually that you need to do, actually before we get into that, let me talk a bit about what Forex is. If you don't know much about Forex industry, let me just take a few minutes to walk you through that. Forex is the largest traded market today, spot Forex. The Forex in general is the largest traded market. So there's about $5 trillion that get traded every day. That's the turnover. And if you compare that to other markets like New York Stock Exchange is one of the larger markets, if you look at that, there's $15 billion that get traded there every day. However, that is minuscule compared to the 5 trillion in the Forex market. So this is the largest market. It's high liquidity, which means so when you trade your stocks, for example, in the equity markets, you may place an order for you to sell your stocks, but sometimes it takes a number of days to fill because somebody needs to be on the other side of the market willing to buy your stocks. In this market, there is so much liquidity that anytime you place your order, especially for retail traders like us, if you're trading multiple lots, if you're trading tens of lots, like you can still sell your. There's so much liquidity in the market that you can still sell whatever your order. You can get it put through instantly, essentially. So you don't really have to wait for liquidity to come in the market. And the market is open 24 hours a day. There are different sessions you can trade. You can trade the London session, which is early in the morning for Eastern time. It will be 3 a.m. And then you can trade the New York session, which is what I trade mostly. I used to trade the London session, but I now trade the New York session just because it works better for my timeline, which starts at 8 a.m. Eastern time. And then there's also the Asian session, which starts at about 7 p.m. Eastern time. So there are 3 different sessions you can trade, and each session has its own flavor to it. However, you can decide which session you want to trade in, and you can just learn that session. It's the same strategies, same everything essentially. However, like for example, the Asian session doesn't move as much. It's more range-bound trading, and you can just learn what strategies work well in the Asian session, and you can trade the Asian session. So if you wanted to just say, let's say, trade from 7 p.m. to about midnight or 11 p.m., you can just go trade the Asian session. And you don't even have to sit in front of the computer all the time. You can set alerts so that when the price reaches the point that you're looking at, you can go make a decision on entering the trade, and then you can put your take profit order so that it gets taken out when the price hits a certain point. So there's a lot of flexibility in trading Forex, a lot more than I found in trading other equity markets. I have looked at trading for the stocks, for example. I've also looked at options, and I found even with the options, it takes more time. And time is something that I'm trying to minimize. I would like to minimize the amount of time that I'm spending trading, and I have more time with my family and playing with my kids and stuff. So that's what I'm, that I'm working on. That's why I'm trying to find more and more efficient way of doing things, so that you're not tied to the computer all the time. There was a time when I used to sleep with my computer by my bed, and I've now realized it's just not. You don't have to do that. There's a lot easier way to make money in trading Forex. So now let's take a look at, so that's a little bit background on the whole Forex industry, and that's what really attracts me to the Forex, just the flexibility of it. So let's take a look at the 5-step process. So step 1 in the process, and this is how you set yourself for a profitable trading day. This is the process that I follow every single day when I trade personally. So I start my day trading with fundamental. First thing I look at is fundamental analysis. I do fundamental analysis first thing in the morning. The reason you want to do fundamental analysis is to get an overall sense of the market. So what's going on in the market? Are there any events in the market that may move the markets? For example, is there a country defaulting on their debt? For example, right now we have Greece. You may have seen in the paper, there's a lot of talk around Greece, that Greece may not be able to pay their loan payment to IMF. That's due by end of this month. It was actually due on June the 6th, and then IMF let them defer the payment to end of this month. And if they don't pay that loan payment, it's over $1 billion. If they don't make that payment, they would be in the default on their loan, which could then trigger a lot of different events. For example, they may get kicked out of the Eurozone. The problem is then they won't have the money. So once they default, the banks will have to pull. A lot of people have, they have a bank, what's called a bank run. Essentially, a lot of people have been withdrawing a lot of money out of the banks. So, which means the banks don't have enough reserves that they need to be able to lend money to people. According to the rules, they need to have a certain amount of money that on hold so that they can actually be in business. And when a run happens on the bank, like it's happening in Greece right now, the banks don't have enough money to lend out, so they need help from European ECB, which is the central bank, European Central Bank, to give them the money, to loan them the money. And if they default on this loan to IMF, ECB won't be able to give them the money, because that means they have poor credit. Just like when we have poor credit, you can't get money anywhere. So that's what happens. So it triggers a lot of different things. It's like a landslide. Once you default on your debt, no one else, for example, a country sells bonds to fund a lot of their activities. Nobody would buy their bonds because they think, well, they didn't pay the money to IMF. Who's to say that they will pay my money back? So nobody buys their bonds either. So a lot of different things happen, which means essentially the country goes bankrupt. It may not go completely bankrupt, but they don't have a lot of money to really do anything. So that's the current situation that's going on with Greece. So it's important to know. So Greece has been in negotiations with the European Union to get one emergency funding from them, and then also get the long-term funding from them so they can grow their economy again. So that's the current situation. So if you did not look at your fundamental, or if you did not do your fundamental analysis, you wouldn't know the background story that's going on. And because of that, euro for the last couple of days has been trading in a range. And we expect to see next week, we expect to see more volatile conditions in the market. If you were not aware of this background information, you wouldn't know how to trade the next day. You may think, oh, it's the range-bound market, so let me just take a trade. And you could see your trade go in a completely opposite direction, even though you've done everything correctly. So that's why it's good to know what's going on in the wider market before you actually take a trade. And one way to get this information is to go to Bloomberg and Reuters. Both of these sites they have all, of course, they're news sites, they're free information, so they're great sites to go and look for this information. Okay, so next step number 2 is economic news. Again, economic news is similar to fundamental analysis, where there's a calendar that gets released. In that calendar, there's usually a list of different news that's coming out. Some of these news is like, for example, like employment data that's coming out, manufacturing PMI, retail sale data that's coming out. All of that is listed in this in the news calendar. So you really want to look at the news calendar to see when the data is being announced. Usually what happens is when the data gets announced, you see a spike in the market. Or the market reacts to the data that comes out. If the data is good, the currency improves, or the price of the currency improves. If the data is negative, it goes in the other direction. So you want to be, that's the general rule. And if you want to be aware of that, because if you're taking a trade, you want to either be aligned to that. Usually it creates volatile conditions in the market, so you want to stay out of the market just as the news is coming out. Once the news has settled down, then you can enter your trade and go with the flow of the market or go with the trend. So that's one of the sites that you can go to, again, free, is Forex Factory. They have a calendar, and you can see the data coming out for the day, for the week, for the month. I recommend every day taking a look at it to see when the data is coming out. So a daily, and on Monday or on a Sunday, I would recommend go to the Forex Factory and look at what's coming in for the week so you can plan your trades accordingly. So that's step number 2. And step number 3 is looking at your news feeds. So a few years ago, we did not have access to news feeds. Retail traders, and I say we, as in retail traders, did not have access to news feeds. And the big institutions, they have a lot of access to a lot of different things, a lot of analysts working for them and such. So now it has become easier to get access to these things. Talking Forex, for example, and Rand Squawk, there are 2 sites where you can go to get this information. And what the news feed kind of tells you is actually not for the high impact news, but it tells you important information that you don't find anywhere else. So things like, for example, they will tell you when a big player comes into the market. So as retail traders, we make like small percentage of the market, very, very small percentage of the market. So the big players in the market are like the banks, financial institutions, investment banks, and so forth. The CTAs, like big hedge funds. So a newsfeed, a lot of times they will have information on when a big name is coming into the market and they're buying or selling a lot of stuff. So when that happens, when you have like thousands of lots being traded, there's usually a reaction in the market, even though the market is huge and it won't get moved just by one institution doing something, but they have to, when they come into the market, they have to sell at levels. So basically they sell, a certain number of lots at one price point, and then some more at different price point, and some more at third price point. So that's what they do, and that's where knowing that information will help us, because then we know, because sometimes when that happens, you see spikes in the market. And again, the reason you want to know this information is so that you're not in a trade when that's happening, or secondly, you know what price they're selling at so that you can align to that side of the trade. The best strategy is to align yourself with the bigger fish So, you can swim with them and you can essentially make profits because they will move the market, and we can just drift with them and make profits with them. So that's why it's very important to know this information. And they also have a lot of times they'll have bids and offers. So they will say, for example, euro, let's say at 1.12, there's lots of offers, limit orders being placed at that level. In that case, when you hear something like that, what I normally do is I either close my trade or I don't go in the opposite direction of that, because we cannot compete as retail traders. Doesn't matter how big our account size is, we cannot compete with the large institutions. So you want to align, again, you want to align to them. If it's in the same way that you are, or same direction that you are trading, then that's great, because it'll become easier for you to get money and make profit in your trade. However, if it is in the opposite direction, you want to be careful, because the big orders will move the market. So that's it's information like that. Knowing all of that stuff is really important. And a lot of times I find that retail traders focus just on technical analysis. What I've learned through all my trading years is that, I work for the banks, and they don't just look at technical levels. They look at everything, all these different things that I'm talking about. And most retail traders, actually nobody tells most retail traders that they should be looking at this stuff. So a lot of times people don't look at this stuff. So that's why it's very important to actually be aware of this rather than just losing trades, not knowing about it. So that's the next step. Actually, around news feeds these days, back when I first started trading, a lot of brokers did not offer news feeds, but nowadays your brokers will offer news feeds for free, and you can check with your broker. A lot of times they will have the same feed as Talking Forex would have, for example. They would offer it for free because they want you to sign up for them. If your broker doesn't offer that, you can always go to Talking Forex and buy that information. It's like, I think it's $30 a month or something like that to subscribe to it. Or you can just sign up for a demo account with another broker who does offer that information. That's another way to get that information for free. Okay, step 4 is technical analysis. Once you've had an overall look at the market, then you want to get into technical analysis. This is when you look at your charts, and this is when you're looking at understanding the trend that's in place currently. You're looking at all your technical information, essentially your daily highs and lows, your average trading range for the day, for the week, and then support and resistance levels, Fibonacci levels, and all of that good stuff, technical stuff that we normally go through to do technical analysis. I find there's a lot of focus on technical analysis. And of course, it is important. This is very important because I trade the charts. I consider myself a technical trader, so I do trade the technical levels. However, knowing the background that we are operating is very important as well. And this is where we look at the charts to get all this information. So this is the step that, of course, I will talk a little bit more about as well. And we are talking about predicting the market direction for the next day. One tool that I use to do that is the daily bars. So this is just your daily chart that I have picked from my charts. A lot of times, some people think that daily bars, if you are a swing trader, which means if you're a long-term trader, you need to look at the daily bars. However, I have found that daily bars are very important for short-term traders as well. And the way I use this information is really to find what the potential trend would be for the following day. And there's a high rate of accuracy when you use the daily chart. So basically you're looking for, it helps you with finding the trend, and you're looking for essentially the right, a daily bar that looks really good, it makes sense, it aligns to your analysis, or it gives you high rate of probability of success, essentially, I should say that. And you look at the daily bar, of course, after the New York close, which is after 5 p.m. Eastern time, and you're looking for a strong pattern. If it's neutral, then we just let it be and we wait for what market to show us what the market is going to do before we get into a trade. If let's say you're looking at, let's say, Euro chart, which I will show you in shortly, and there's no clear direction in the market, you just leave that pair for that time, and you just move on to something else that will show you clear direction, and you take trade in that currency. So we don't need to take every single trade that becomes available in the market. We have to be selective with our trades. We only take the higher probability trades, and that's how we become profitable over the long run, just by sticking to better quality trades. And the way you trade is, again, you look for strong daily patterns, then you mark your support and resistance levels on your chart, you wait for a pullback, and then you look for entering the trade on a lower time frame chart. So let's take a deeper look at our daily bars here. So this is a daily chart for pound US dollar cross. So here, this is what I mean by support and resistance level. So I look at my daily chart, I go in there and I mark different levels. For example, this is a very important support and resistance level. See how price reacted at this level. It had trouble going through it previously. And if you look at previous point here, price has reacted here as well. It turned here the last time. So we know this is an important level. So going into it again, it turned again. And reacted at this level, and we had a big push to the downside. And now going up again, price had trouble. It went through and then came back and tested the same level again. And again, twice it tested the same level. So we know this is a very important level. So that's your support and resistance levels, essentially, the areas where the price has reacted previously and we expect the price to react again. So that's that. And then we are looking at, so let's take a look at the daily bars now. So let's take a look at this, for example, these daily bars. These are all 3 days worth of activity right here. So we see here the price comes and tests this level, 59.24 level. So we call this the 20s level. And usually we see a lot of times price reacts at the 20s. 20s is an important level. So you see here, and then the price rejects this level, which means there's a long wick on top of the candle here. This is your candlestick. The green means it's an up direction. All this green candle means that price has been going up, and as we can see, it has been going up. This green body, normally we would consider this anything with a green body to be an uptrend. However, based on the daily bar analysis, I would see this as a rejection of the price, which means price decided to try to break through this 5,900 level, and it rejected. So based on my technical analysis, I would say, based on this daily bar, I would expect the market to move down the following day. So sometimes it will come and do a test of this level again and then move down, but normally we just expect a pullback. So here we can see the next day market opened, pulled back up a little, and then came down. So this is how we use this daily bar to predict the market the following day. So this is how you do your technical analysis. You look at your daily bar, you make a judgment on how the candle is, what the candle is, how the candle is formed, and you look for direction the following day. Yes, so that's so when we talk about morning and evening stars, that is morning and evening stacks. Stars are essentially reversal pattern. And actually, I'll do another webinar on the reversal pattern, so we'll talk more in details on what the reversal patterns look like. So yes, this is a reversal pattern and a morning and evening star pattern. So depending on whether it's set to the upside or downside, it's called morning and evening star. So this one here, for example, but we're not talking about reversal patterns right now, but it is a reversal pattern. So just on the daily, based on this daily bar, we basically project what the market direction will be the next day. So this day, when this candle closes here, this is actually a neutral candle. It rejects to the bottom, it rejects to the top. There is a lot of indecision in this candle. So on this day, I would suggest to actually, there are two things you can do. I would suggest, so market has marked made a range here. So we draw our support and resistance lines here and to the top here. And we know that this is a strong point where the market had trouble before. So we would expect the price to reject at this point, and we would expect the price to reject at this point, or at least have some reaction at this point. So you can decide to trade the range. You can decide to take a short at the top and a long at the bottom. However, a better one would still be to actually just leave this candle alone. You just don't trade based on the daily par that day, because it's an indecision candle. The market doesn't know which direction it wants to go in. And it happened to be a Friday as well. A lot of times, I think it was a Friday. A lot of times market, Thursday or Friday, a lot of times market, usually on Friday, we see it just kind of goes into a range, doesn't really go anywhere. So Mondays end up being reversal days because of that, because it goes in the opposite direction anyway. So based on this, so the next morning we come in and we look at, we see this bar when the market closes. This is a very strong down bar, which means the following day we would expect the market to go down. So we would expect the market to pull back and then go down, which is what what happens the next day. So this would have been a really good trade. This is a very nice rejection pattern as well, which is different, like Janelle just mentioned. However, based on just the daily bar here, we would expect the market to go down. And why would you think that? So let's walk through that. So first, there's a huge wick at the top of the candle, which means the price rejected. The price tried to go back up here. It got rejected. Not many people were willing to trade at that price. They weren't willing to buy at that price. And we saw sellers come into the market, which drove the price down. And then we would expect here the market to pull back, and then the following day the price to go down, which is what happens the next day as well. And this candle here is a very strong down candle as well. So when you see this daily close, again, you would expect the market to go pull back up and then go down, which is what this market did. So this daily bar the next day did. So based on our daily marks, we can predict what the market direction would be for the following day. And the reason we want to do that is because it's so much easier to trade with the market as opposed to against it. I have done counter trend trading. It's something that I've been successful at. So there's nothing wrong with that. It's just a little bit more stressful, because sometimes market may pull to to a deeper level than you expected it to. Sometimes stop runs happen, which means the market keeps on going in the opposite direction before it changes direction and comes back. And if you were expecting the price to react at a certain point, it may go like another 30 pips beyond where you expected, which means your stop gets hit, and then the market reverses direction and goes in the direction that you were expecting before. So it's harder to do that. So it's better to just trade with the trend that's in place, and it's just easier then, and you make more money doing that. You have less stress, and everybody's happy. So that's how you essentially look at the market. So this one here is a bit of a neutral candle, because it did reject to the top and then it rejected to the bottom, and this is a very small body. So it's hard to, based on this candle, it would be hard to, normally I would expect, because there's a strong resistance here, I would expect the price to go up, which it did, but like I would normally say, just leave this pair alone and go find another pair where you have strong directional trend. Based on your daily bar, and go trade that, and that's what we're looking for. So for example, here we have this nice rejection, same thing. If you look, this is in the opposite. I just want to give an example in the opposite direction. So we have a nice rejection from the top here. Similarly, we have nice rejection from the bottom. Nice candle body. Even most people would think that actually this, because it's a red candle, that we would expect a down day, but that's not the case. We would actually expect an up day, because there's this long wick, not nice rejection of the price here. So we would expect the price to pull back and then get into the market for an up move. And this is a very strong up candle. This is easier to tell just because it's a green body candle. There's a wick at the bottom. So we would expect the following day, we would expect an up day. We would expect the market never just moves in one direction. No, most of the time there'll be a pullback and then a move in the direction of the market. So you wait for the pullback, and then you enter in the direction of the market. So this is exactly as you saw, there's a pullback and then market goes up. This is a very nice rejection of the bottom here. We would expect another update based on this candle. And as we can see, this one, the pullback was very, very small. Like just the way the candle is formed, that's what we would expect, a small pullback and then enter in the direction of the market. So so that's what you do, and that's essentially your how you look at the market based on your based on the charts. So let's go back to, so this is the daily charts essentially. And then, so we've done that. So, and this is an example that I essentially walked you through on the charts, how to use the daily bars. Okay, so we have covered 4 steps, and now we are at the very last step. And I find this to be the most important step when you are trading, which is the post-market review. And I find a lot of people don't talk about this step. And maybe it just comes with experience. That's why not a lot of courses talk about it. But most successful traders that I have talked to do this particular step. So I personally do this particular step, and a lot of successful traders that I've talked to do this step. So I would suggest that this is a very important step. You prepare, preparing for the following day, essentially. So doing your daily bars is one way to prepare for the next day. And then you also want to ask yourself questions. How did the market behave that day? Like, for example, now Greece is a big story. And as you can see, actually, on, for example, if you look at our euro here, let's take a look at a 15-minute chart, for example. So if you look at how much it's traded in a range, so the price just wasn't able to break below, let's do a 30-minute chart. Yeah, just easier to see. So this is your support and resistance area right here. See how price wasn't able to break below and hold below this range, and it did not go up. So this is 3 days. In 3 days, price was not able to go above this point or below this point. So this is called a range. So the price traded in a range, which means there must be something going on in the market that's causing the price to trade in the range. And for example, in this case, it was the Greece, because Greece was in negotiations with the Eurozone to see if they could get the funding. Because they were not able to come to an agreement, the market was just waiting for them to either for Greece to default or for Greece to get the funding so they won't default. However, because there's so uncertainty, market doesn't go anywhere, it just goes sideways. And that's the kind of information you want to know so that you prepare for the next day. So next day now, over the weekend, actually, we're expecting to see some sort of either decision being made or some more news to come out about Greece. And based on that, we would, I would expect to see a gap in either direction, which means the price would break out to either side of the range based on what the decision is made. If there's no decision, then we may just see another, for the next few days, the market will be volatile based on just that. So just keep that in mind. So you want to look at how the market behaved. And then you also want to look at what setups were present that day and how did they play out. So for example, I have the course that I do, there are 3 different strategies that I talk about. So I would normally go in there and mark my charts and say, was there a setup present today? How did it set up? What did it look like? And the reason you want to do that is because it ingrains the setup in your mind. That way, the next time when it's happening in real time, you'll be able to recognize it. Your brain will just pull that information out even without you having to consciously think about it. Over the longer term, you will get really good at it. It's like driving a car. When we first start driving it, we have to be really careful, and we look at, we are afraid to look to the side because we think we may crash the car. But later on, once you've been driving for a few years, you're eating a burger, you're drinking coffee and driving and talking on the phone at the same time. So that's the kind of stuff that it becomes automatic. Driving becomes automatic to you. And that's what we're working on is, I talk a lot about the mental aspect of trading, finding easier ways to make this information automatic in your brain so you don't have to work so hard to find the right patterns and stuff. They will just start coming out to you, becoming available to you. So that's another thing. And then basically the whole point of doing a post-market review is, we're planning for the next day. So what do you expect the market, how do you expect the market to behave the next day? So we'll look at the daily bars, we'll look at support and resistance levels, and we'll see what will be the best level, or what will be the best levels to take the trade at. So once you've done all of that, trading becomes really simple. So then all you have to do is wait for the price to get to the level that you're expecting it to get to, and then you take a trade, you put your stop loss and take profit, and you're done. So it becomes that simple, but you have to follow, you have to do a little bit of upfront work for it to become that simple. So that's that. And then the last thing that I want to talk about is I'm putting a course together, which starts on July the 11th. And I'll talk a little bit about the course. We have 8 live online sessions, so similar sessions to what we're doing today. However, we take a very structured approach to the course. So we'll talk about what the different, so each week I will talk about different things. So we'll talk about, for example, we looked at technical analysis, how to do proper technical analysis. We'll go a lot more in depth with that, for example, looking at the fundamental analysis, like, for example, what are the different things you're looking for? How do you incorporate that into your trading? A lot of that stuff we'll talk about, and how to draw conclusions based on that stuff. So again, this is something that gets missed, I find, in a lot of the courses. One, it's a little bit dry, and secondly, most of the people who are trading, well, I have financial background, so I have like economics. I've done MBA, so I have an economics background. So I tend to talk about that stuff, and I can explain this stuff. A lot of times people have difficulty explaining the stuff in a meaningful way, so they just disregard the stuff. But it is important stuff. So I know like banks pay a lot of attention to that. Financial institutions pay a lot of attention to that, and they are the big kahunas in this market. So it's important for us to pay attention to this stuff as well. So I break it down for you, and so I can essentially save you a lot of time in understanding that stuff and how to use it properly, what's important and what's not, that sort of stuff. And then I also, I will show you my 3 profitable trading strategy that I use. And these are the setups that occur in the market very, very often. You can get at least a trade a day based on these setups. And you can make some really nice pips based on these trading strategies. And again, I do a lot of hand holding in this. So it's not like you will just get an online course and it's up to you to go implement it. I find the biggest challenge that most Forex traders have is implementing the stuff they have learned. And that's why we see a lot of tendency in this market to go from one strategy to the next, because people are not able to implement this properly. And that's where I find I excel. I am really good at developing people in my job. Like, it's not even part of my role. And everybody comes to me for career advice and how to get that next job or how to do something, because I just a natural talent that I have. I can break things down really well, and I can help people kind of take a unique approach to it, which really works. So people development is something that I am good at, and hence I'm kind of going in this direction as well. So I will do a lot of hand holding. I do, and I will basically every day, as part of this course, you also get a bonus that you'll be able to join my daily analysis calls. So I walk you through this process every single day, and you have access to me, a lot of access to me. And then we also talk about a lot of risk and equity management. Again, this is a topic that people don't take seriously, but it's a topic that can help you make a lot of money and actually save you a lot of money, so you don't actually lose money in trading. And and why should you take this course? Because again, I simplify the process a lot. I am not into making things complicated. I want to keep things easy. One of the things I say is trading with ease. That's what I'm all about. I just want trading to be easy, and it's just simpler the better. And that's what I will teach you as well, how to make them easy. And then I do deliberate practices, which means I've done a lot of research and a lot of study in how to excel in accelerated learning process. So I will share a lot of these practices, how to really get how to help your brain pick out the patterns, because it's all about pattern recognition. How do you train your brain to pick out these patterns? So I'll help you with that as well. Mindset is another thing that I find a lot of courses miss out on. Normally they will just have one topic that would say psychology of trading. However, it's not just the psychology, it's how do you take that mindset and how do you improve your mindset that you're making consistent profits. And that's another thing that I focused a lot on, and I bring that into the course. Peak performance is another thing that doesn't get talked about a lot in Forex trading. It's all about technical analysis. However, I have found to be a successful trader, to be successful anything, essentially, you need to look at peak performance, whether you're a great athlete, or you're really good at the top level in your job, or whatever the case may be. You need to look at peak performance, and that's what I bring into this course as well. And the reason you should take the course with me is, one, I can cut your learning curve in half, and I can also save you a lot of time and money. I've spent thousands upon thousands, probably close to $100,000 in education in this field. And this is not taking into account my MBA, which was on its own 6 figures. But just in taking different courses and learning different strategies and different mindset things and all of that. And you actually don't need to pay that kind of money. I can just help you with that stuff as well. And the cost of the course is very, very small. It's $499, which is quite cheap, actually. And the reason I'm offering it for this price is because I really want to create some success stories. It won't be this price the next time I offer it. However, for now, all the people that I have worked with, I've been doing a pilot for this for the last few months, and everyone that I've worked with has become consistently profitable. So, which is something that I really pride myself in. And I want to have some more success stories before I really kind of put a lot of focus into it. So that's what I'm working on right now, is just keeping the size of the program really small, but providing a lot of like hand holding and support. So that's about the course. And then, like I said, you will get access to my daily analysis calls, which I charge $199 a month for. So really the course ends up being just $100. And there you will get practical application. You'll get to learn how I'm reading the charts, how I'm reading the market, the levels that I'm looking for trades at, and how to take those trades. So that there's a lot of valuable information there. So I also will have a private members forum where we post a lot of trades that we are taking or that we took. So it's a great learning tool as well. And of course, you'll have unlimited support from me via email, Skype, or on the calls. So you have a lot of access to me. So that's the benefit. And if you to register for this course, you go to tradingwithvenus.com/learn-to-trade-forex. This is the link you would follow and register for the course. So any questions or comments, or anyone have anything to add? The daily analysis calls are before the New York Open, which is at 8:30. So we do our daily analysis call at 7:15 a.m. Eastern. And actually, what I'm going to start doing is, when we start the course, I will also start either recording the calls, or I'm going to put that in private members forum, just the levels to take a look at. Yes, the course will include actually in-depth technical analysis. So we'll go through the different trade strategies, the 3 different trade strategies that we'll look at. I will cover those at great depth. And then we'll also cover other things like just the basics of technical analysis, for example, reversal patterns and different patterns that set up. So we'll go in depth into technical analysis. So in terms of taking the course, so the course will be held on the weekends. So every Saturday we'll have 2-hour session, and we'll do 8 to 12, for example. oh, sorry, not 8 to 12, sorry, 10 to 12. The sessions will be recorded, just like this webinar is recorded. The sessions will be recorded, so if you're not able to attend the session, you can always come back and look at the recording. So that's one. But so it'll be 2 hours on a weekend that you will be doing, and if you come to the daily analysis calls, those will be about 45 minutes in the morning, 45 to an hour. So we usually wrap that up before the morning session so that we can actually take the trades. So those are the time commitments. However, I would recommend doing more on your own. Of course, the more the more questions you ask, the more in depth you look at the market, the better it will be for you. Any other questions before we wrap it up? Okay, going once, going twice. All right, perfect. So sounds like we are all good. So again, thank you so very much, guys, for attending the course. I appreciate you sharing this time with me. You're welcome to, I'll have other webinars as well. You're welcome to come and attend those. And if you have any questions for me, please feel free to just email me at raman@tradingwithvenus.com, or you can go to the website and send me through the contact form. You can send me email from there, or you can catch me on Skype or whatever. Okay, great. So thank you very much. Have a great weekend, you guys, and I will see you again soon. Bye for now. Bye, everyone.